Spar has asked some suppliers to stagger February payments. It cited cash flow considerations as a reason for the request, and that's according to an email obtained by Business Day. In KwaZulu-Natal, Spar proposed paying 50% on February the 20th and the balance on March the 10th. The group says the move is part of routine working capital management and not a sign of financial distress, as it affects less than 3.5% of February's creditor payments in KZN. The request comes amid leadership upheaval, a costly SAP rollout and mounting investor pressure, with the share price down sharply over the past year. Chinese and Indian vehicle brands have turbocharged interim results at Super Group. The groups reported a 102% jump in sales volumes of emerging Asian brands for the 6 months to December. That segment now makes up 30% of total new vehicle sales, and thanks to their popularity as consumers buy more affordable cars, revenue rose 7%. Operating profit climbed 8.7% and headline earnings per share surged 28%. Looking ahead, CEO Peter Mountford says with improved capital allocation and lower leverage, the group is well positioned to pursue high growth opportunities and respond effectively to macroeconomic volatility. African Rainbow Minerals is eyeing higher half-year profit. The diversified mining and minerals company says its headline earnings could come in 15% higher than the prior period. It's pointed to higher US dollar PGM basket prices at Two Rivers and Mudikwa mines. The company is set to open its books next Friday. Altron says it's had a stronger second half, putting it on track for annual headline earnings per share growth of more than 30%. In a voluntary update, the group reported low double-digit earnings before interest, tax, depreciation and amortization growth, and operating a profit is up more than 20% year to date. This was driven by disciplined execution and a shift toward higher margin annuity revenue, which is now over 65% of total revenue. The platforms division, including Netstar and FinTech, generated the bulk of profits. And while IT services remain under pressure, the group has noted that the unit has returned to monthly profitability. Altron says it is well positioned to enter its next phase of transformative growth as it prepares to release full-year results in May. Mid-tier miner Pan-African Resources is on track to break into the JSE's top 40. That's after a 1,000% surge in its market value over the past 3 years. The jump was driven by record gold prices following the next quarterly review of the FTSE JSE indices in March. Gold miners will make up roughly an eighth of the benchmark. Pan-African's interim results showed 50% production growth, a 157% jump in revenue and sharply lower debt, with the group expecting to move into a net cash position. Management says it will not hedge gold this year, giving shareholders full exposure to the metals rally, a move that could further boost its appeal to index-tracking institutional investors. The Competition Commission has prohibited Transparco's proposed 128 million rand acquisition of Premier Plastics. This deals a setback to the packaging group's expansion plans. The deal, announced in November, would have strengthened Transparco's footprint in the retail and wholesale sectors, particularly in Gauteng, where Premier manufactures plastic carrier bags for major FMCG retailers. Premier also owns polyethylene recoveries, a recycler supplying raw materials to both Premier and third parties. Transparco says it's reviewing the Competition Commission's decision and considering its options, and will update shareholders in due course. The regulator has not disclosed its reasons for blocking that transaction. South Africa's composite leading business cycle indicator slipped 1% month-on-month in December 2025, marking its first decline since September and reversing November's 1.4% rise. Now, the drop reflects weakness in 5 of the 7 components, led by slower growth in real M1 money supply and fewer residential building plans approved. Gains in dollar-based export commodity prices and stronger vehicle sales were not enough to offset the broader slowdown. The composite coincide indicator also edged down 0.2%, weighed by weaker industrial production and lower manufacturing capacity utilization, while the lagging indicator fell 0.4%. Together, the data points to softer economic momentum heading into 2026.